We have integrated our foods and refreshment divisions to increase agility and better serve consumers. Accordingly, the company will report its results in the following three operating segments. Home care, which remains unchanged. Personal care is now designated as beauty and personal care. And foods and refreshments has now been integrated, and this includes food solutions. Now, focusing on performance. From a market point of view, we are seeing a gradual improvement in demand. In this context, we have delivered another quarter of strong volume-led growth. Our reported revenue growth was 3%. Our comparable domestic consumer growth, which is like for like, after eliminating the accounting impact of GST, grew at 16% with underlying volume growth of 12%. Our comparable EBITDA margins expanded by 100 basis points, and our EBITDA at 2251 crores was up 21%. Our profit after tax but before exceptional items, PAT BEI, stood at 1567 crores, up 21%, and our net profit at 1529 crores grew by 19%. On the cost side, our cost of goods sold was lower on account of benefit of mix, judicious pricing, and savings. We continue to invest behind our brands. Our increase in A&P spend was driven by investments in innovations, activations, and competitive actions in the marketplace. Now, let me spend a little bit of time talking about our divisional performance. All our three divisions have during the quarter delivered double-digit volume growths. Home care, we have delivered a robust performance with comparable growth of 20%. In laundry, all our key brands grew in double digits with good growth momentum. In household care, double-digit growth was led by strong performance in Vim. Domex liquids was relaunched in South India, and Domex powders extended to new geographies. In beauty and personal care, growth was broad-based and across both personal products and personal wash. In skincare, Fair and Lovely and Pond's registered strong growth. Double-digit growth in hair was led by the premium portfolio, and Indulekha delivered another quarter of strong performance. Growth momentum was sustained in color cosmetics with the continued and successful rollout of various innovations. The Lakme 9 to 5 natural range of makeup and skincare products infused with aloe vera was launched during the quarter. Deodorants delivered an impressive growth with Axe Ticket gaining traction. Personal wash grew well with a high growth trajectory being maintained by Dove and Pears. Moving on, foods and refreshments witnessed a strong growth in ice creams and frozen desserts. In beverages, tea delivered broad-based double-digit growth across key brands. In coffee, Brew Kannadigara was launched in select geographies to cater to local taste preferences. Ice creams and frozen desserts grew in double digits during the season on the back of innovations and geography expansions. Foods registered double-digit growth led by Kisan and Nor. As you're aware, we also launched the Lever Ayush breakfast range in Tamil Nadu. From drivers of growth, I think it continues to be relentless focus on innovation, impactful activation, and sharper in-market execution. We continue to sustain investments in market developments and in emerging categories. Looking ahead, we expect gradual improvement in demand. Crude volatility and currency inflation are key watch-outs. Also, in the near term, a step up in competitive intensity is anticipated. Our focus remains on volume-driven growth and consistent improvement in operating margins. Our strategy, therefore, remains unchanged: consistent, competitive, profitable, and responsible growth. Thank you.
This is Priya from CNBC. I wanted to understand with regards to rural growth. The last time we spoke, you said that you were a little bit cautious about rural growth, and you said that in the first quarter, when we really know whether the rural growth has bounced back. So is it back to historical levels? Is it growing 2 times or twice the rate at which urban has been growing? And secondly, on the input costs, I want to understand what is the kind of trajectory that we can see, because you said that it's a space that you will continue to watch out.
Yeah, but Priya, let me be very consistent. I had said last quarter and even a quarter before that we should wait for a few quarters to see if there is an underlying trend which is emerging. Yeah. So we aren't yet at a stage because, the base, this was the pre-GST quarter last year. So it would be wrong for us to look at just the headline numbers and come to a conclusion. The quarter has been very decent for us. with 16% top line, 12% underlying volume growth, and 100 bips improvement in margins. So there is very clear we are satisfied with the performance. It is broad based. If I look at it from the market perspective, yeah, certainly rural, which went through a pretty lean period in 2016. 2017 was a year of massive disruption in the market, so I wouldn't want to pick up 2017. But definitely, rural has started growing, and it now, from all indicators, it is growing at a rate faster than urban. But the markets are still, if you look at off-take, not the growth number, the market is growing in the vicinity of 6.5%, and volumes are growing 5.5% for the markets in general. They are better than the 3% kind of volume growth that we saw in 16. Yeah, but they are certainly improved, and we are very hopeful that they will continue to improve. But a definitive trend, let it normalize, the base become normalized, then we will start seeing.
So on the input cost, if you really see in the quarter, I think there are two elements playing out. First, when you see crude and crude related, we've seen a significant increase. We've also seen depreciation coming from the currency. However, when you start to look at some of our veg oil portfolio, which is really not cleansing, we've also seen costs being low when you compare year on year. So therefore, when you look at the totality of the mix, in the quarter in question, we may not have seen the kind of inflation. However, when you look into the future, and I think that's something is a key watch out, as we said. Now on the crude side, we see a lot more volatility, also driven by some of the international factors. Currency continues to be under pressure. And we also expect that some of the flow through of the crude related will now start to come in. So it's an area of clear watch out, and we'll have to see how to dynamically manage our business.
Can we expect some kind of price increases going forward?
So I think here we have always been consistent. Look, there are many levers to run a business and how to maintain your profitability. Judicious pricing is one of them. Even in the quarter in question, we have taken some price increases without losing market competitiveness. So clearly we will look at all levers, and where required, when required, we will look at judicious pricing.
One compulsory commentary. We've completed 1 year of GST. Just want to understand, July 1st is when we completed. So just want to understand the commentary. Has the industry completely settled down from the impact of implementation last year? Or are we still seeing some kind of residual issues in some kind of, probably in trade pipeline or elsewhere?
Would you like to?
So I think if you see from an implementation execution point of view, I think it's all now well settled in. Yeah. So I think we've gone through GST 2.0. We have seen the e-way bill implementation. So at least from an operational point of view, I think it's fairly stable. And I think we've talked about it either when you see from a trade pipelines point of view, there is also stability. So all in all, I don't think from an operational point of view there are any issues, and actually now it's business as usual. Having said that, I think there are still elements. I still think there is working capital which we need to unlock. As we have gone through filing of our various returns and looking at some of the refunds on exports and looking at some of our fiscal units, there is money which we still need to realize which is stuck up in working capital. But day-to-day operations, I think it's business as usual.
I wanted to talk about pricing once again. Do you think last year we've seen pricing go through a significant change, and now do you think pricing power is back with companies? Do you think that companies are in a position to take lead and sort of increase prices going ahead?
I wouldn't want to comment on the industry at large. I think what I'll do is comment on Hindustan Unilever. First is, last year when the GST rates went down, we took the prices down of our products and passed the benefit to the consumers. So the good bit is, even when there is some inflation, the price of our products would still be cushioned by the reduction that took place after GST. Yeah. Now, price volatility is not something which we are seeing this year. It has always been there. Whether it is veg prices, whether it is crude prices, the prices go up and the prices go down. I think what is critical to remember is, as Hindustan Unilever,
on to the volatile price. Yeah, so we are always judicious, as Srini mentioned, in terms of price increase, and we will always keep price-value equation when it comes to looking at it from the lens of consumer.
The prices of stock went up ahead of earnings, and levels are becoming more conscious and turning attention towards how earnings growth are justifying valuations? How would you say, or for how long would you say that HUL is staying around the board for the last?
Yeah, I would not like to comment on the stock price, but I would definitely want to comment on our financials. And if you look at it over the last 7-8 years, we have consistently improved our margins. I think
Consistently improved our margins. I think 26 out of 27 quarters we have improved our margins. Even during the toughest period, we have grown our business. So I'm very pleased with how we have navigated turbulence and how we are reshaping our business for the future.
Will the impact of MSP also have an impact of your raw material prices? Will be also a factor in pricing? MSP prices if the government is just finalized?
See, first is we certainly believe that the
it's very important for us not to look at just absolute GDP growth, but for inclusive growth. From an FMCG perspective, absolute GDP growth does not correlate to the growth of FMCG sector. What is very important is when you put more money in the hands of more consumers, which is another way of saying inclusive growth. So we completely support government's move to put more money in the hands of farmers. As far as agriculture inputs are concerned, of course we have agriculture produce which goes in as raw material. But the two big items for us are the crude oil prices and the vegetable oil prices. Srini alluded to that. Crude oil prices have gone up significantly from the same time last year, whereas veg oil prices, they remain benign.
Last quarter, you mentioned that rural growth was witnessed in certain parts of the country. Does this growth continue to remain only in these parts of the country, or is it more widespread?